We've made changes to our future vehicle lineup to expedite the release of new models ahead of the previously announced start of production in the second half of 2025. As a result, we anticipate that it will be more like early 2025, if not later this year. These new vehicles, which include more affordable models, will utilize both current and next-generation platform components, and they will be able to be produced on the same manufacturing lines as our current car lineup. Tesla mentioned quickening. Overview the launch of new models that would use aspects of this next generation platform that they've been talking about, as well as aspects of their current platforms. And these vehicles will be produced on the same manufacturing lines as the current vehicle lineup at each quarter, including this one. There's always the speculation by the market that competition is going to erode margins, competition is going to erode share, competition is going to slow growth, and yet that has not happened there. There is no company yet that's transitioned to the effectiveness and the efficiency and the productivity that Tesla has around drivetrain, around engine, around chipsets, around batteries. So there's a moat around Tesla because it was, the first mover, but they've maintained their share too. Innovation, everybody criticizes this guy for a million different reasons, but at the end of the day, when you ask somebody if you want to buy an EV, what do they want? They want a Tesla as one of the leading innovators in the electric vehicle industry. Tesla has seen its share of ups and downs, influenced by a dynamic market and a rapidly changing technological landscape following CEO Elon Musk's announcement that the electric vehicle firm intends to start producing new, reasonably priced EV models by early 2025. Tesla shares recently increased by 12%. Kevin O provides his thoughts from possible privatization. Financing strategy changes that take advantage of the higher stock valuation. We can see that Musk's moves are calculated and daring at the same time. These strategies also take place in the face of larger economic difficulties, such as supply chain disruptions, inflationary pressures, and geopolitical uncertainties, all of which add layers of complexity to Tesla's operating environment. Stay tuned as we examine the complex web of factors influencing this trailblazing company's future, but before we do so, please click the like and subscribe buttons. Welcome to Tesla Stock News. Let's get started with this video. As we shift our attention to the electric vehicle market, it is evident that Tesla continues to play a significant role in defining its landscape. With a reputation for innovation and quality, Tesla has set high standards that propel the industry forward. Nevertheless, there are many obstacles that Tesla and the entire sector must overcome in order to achieve widespread EV adoption. While metropolitan areas are increasingly equipped with charging facilities, making daily commutes and short trips convenient, Kevin O, a well-known Canadian businessman and Shark Tank host, claims that one of the main obstacles is the infrastructure required to support EVs, particularly in terms of charging stations. However, the situation changes once you leave these areas. Cities, due to the dispersed placement of charging stations along roads and the lack of infrastructure in rural regions, long-distance driving continues to pose a major challenge for owners of electric vehicles. The gap has a big influence on customer behavior and attitudes about how feasible it is to acquire and operate an EV for all kinds of transportation. In addition, the adoption rate of EVs hasn't kept up with early, optimistic projections. Consumers' initial excitement about the introduction of new EV technologies has subsided as they come to terms with the realities of incorporating these vehicles into their daily lives. For example, charging an EV takes longer than refueling a conventional vehicle, and the upfront cost of EVs is higher, which contributes to slower adoption rates. The possible privatization of Tesla is one of the maneuvers that has received the most attention. According to Kevin, if this strategy is successful, it might revolutionize the business by giving it greater freedom to create free from the constraints of volatile markets and quarterly financial reports. Kevin O adds that one of the main tenets of Musk's approach is taking advantage of Tesla's recent stock performance, which has seen the company's shares rise by about 40% from its recent lows. This is a good time to do this. Musk's plan most likely entails depending less on high debt burdens and more on financing based on the rising stock price. This is a particularly clever plan because it lowers Tesla's financial risk and debt load, making it a strategic pivot that takes use of the market's momentum to the company's advantage. Furthermore, Musk's strategy might involve talking to institutional investors who are already shareholders in order to perhaps roll over their current equity into the privatization agreement. In addition to securing the necessary funding, Musk would guarantee that these significant stakeholders continue to be involved with and supportive of Tesla's long-term vision. This could reduce the requirement for significant external financing, paving the way for privatization while preserving stability in ownership and investment by skillfully utilizing the current market conditions. Musk is setting Tesla up to move forward fearlessly in the current global economy, free from the limitations that usually accompany being a public corporation. Every industry is dealing with a variety of macroeconomic issues that have an impact on their operations and long-term goals. Like many others, Tesla is confronted with formidable economic challenges, such as disruptions in the supply chain and inflationary pressures. These difficulties are not insignificant. They have an effect on cost structures, manufacturing schedules, and ultimately consumer prices. Supply chain problems, especially in the automobile industry, are frequently caused by shortages of important parts like semiconductors, delays in raw material delivery, and logistical bottlenecks. These disruptions can lower production volumes and raise prices, putting tremendous pressure on businesses to control costs and stick to production timetables in order to reduce the risk associated with supply chain volatility. Tesla has been navigating these rough waters by expanding its inventory of essential components and diversifying its base of suppliers. Another significant obstacle for Tesla is inflation, which reduces purchasing power and raises operating expenses. This entails addressing growing prices for the components and raw materials needed to produce vehicles. In response, Tesla has taken the initiative to adjust its pricing tactics and look into more cost-effective manufacturing techniques in order to preserve profitability without sacrificing innovation or quality. Along with growing its global production base, Tesla is positioning itself closer to important markets and reducing the risk of regional economic or political upheaval by establishing additional factories at strategic sites across the globe, lowering transportation expenses and enhancing the effectiveness of the supply chain. The company's dedication to innovation complements its proactive approach to handling economic issues. In order to keep its products competitive and appealing to consumers in the face of broader economic pressures, Tesla keeps investing in research and development to advance battery technology and boost system efficiencies. However, the Tesla journey doesn't end there. Every day brings new and exciting discoveries that make the journey even more fascinating, which is why Tesla keeps drawing more and more investors down its rabbit hole. But do you know who else shares pro-Tesla optimism? That would be today's sponsor, Seeking Alpha, when it comes to Tesla's impressive growth. It's not enough for Tesla supporters and those with a keen eye to find the next hidden treasure in the stock market to simply watch from the sidelines. Seeking Alpha is your one-stop shop for the most recent Tesla information. Targets for Tesla stock price innovation from Tesla and everything Elon Musk avoids the mainstream media's negativity towards Tesla. The greatest online source for pro-Tesla news is Seeking Alpha. Our channel may receive a commission if you click on the affiliate links in the description and make a purchase. We appreciate your support. The Cybertruck from Tesla. Unveiled amid much fanfare, the Cybertruck is a remarkable testament to innovation and audacious design in the automobile sector. With its sleek, futuristic design that stands out from conventional pickup trucks, the Cybertruck is a representation of Tesla's mission to challenge established automotive norms. It also features bulletproof glass windows and a stainless steel exoskeleton. Since its release, the Cybertruck has attracted a lot of attention and a sizable number of pre-orders, indicating strong market interest and consumer curiosity. It also aims to set new standards for vehicle durability and performance. This excitement is a reflection of the Cybertruck's potential to enter the profitable pickup truck market, which has hitherto been controlled by gas-powered automobiles. Tesla's move into this market with an all-electric truck is consistent with their overarching plan to quicken the global switch to renewable energy sources. The Cybertruck's bold design is more than just show. It represents Tesla's methodology for completely reimagining vehicle architecture. The truck's design maximizes both its functional and visual effect, providing attributes like increased luggage capacity. Its off-road capability and towing capacity should make it a competitive choice for both traditional truck users and those searching for a flexible car that complies with environmental standards. Elon Musk has voiced his skepticism regarding remote work, casting doubt on its ability to maintain productivity and foster collaboration, particularly in fields that require high levels of innovation like technology and engineering. He claims that the idea of working from home is somewhat akin to the fictitious Marie Antoinette quote, "Let them eat cake." It's as though you're going to work from home and you're going to force everyone else who made your car to work in the factory, the people who come fix your house, to work from home as well. Okay, so he continues, but ultimately it comes down to his position initiates a more extensive discussion about the effects of remote work on employee dynamics and company culture. Traditional workplace conventions are being challenged by remote work, which also raises issues about team cohesion and discrepancies between on-site and remote employees. This transition has the potential to create divisions within the workforce, which could have varying effects on employee engagement and career advancement. The tremendous societal ramifications of remote work are forcing corporations to reevaluate communication and cooperation techniques to strike a balance between the requirement for in-person engagement and flexibility as businesses like Tesla investigate hybrid models. Their goal is to blend the advantages of remote work with the collaborative spirit of traditional settings, managing this combination to promote a robust and welcoming company culture more broadly. Market trends point to a growing shift in favor of innovative and sustainable technologies, with Tesla at the forefront. This puts the company in a strong position for future growth, particularly as global policies and consumer preferences shift in favor of renewable energy and electric vehicles for investors hoping to profit from these trends. The electric vehicle EV market is predicted to grow dramatically over the next several years, and Tesla's forays into battery technology, solar energy solutions, and autonomous driving software give diversified investment opportunities. Let's look at a hypothetical investment scenario where Tesla produces cars as its primary product. If you were to invest $1,000 in Tesla stock, your return would depend on the state of the market and Tesla's performance over time. For example, if Tesla's stock grows at an average rate of 10% per year, a common target for equities and growing industries, your initial investment could grow to approximately $2. 594 in 10 years without taking into account factors like market volatility and economic factors that could affect stock performance. This example shows the promise of investing in rapidly expanding industries such as electric vehicles and renewable energy. Nevertheless, investors must take into account the associated risks and exercise due diligence. The competitiveness of the EV market, changes in regulations, and shifts in the economy are all factors that could affect Tesla's stock performance and investment. Today, we've taken a close look at Tesla's position within the evolving EV market, Elon Musk's strategic maneuvers, and the broader economic challenges the company faces. We also looked at Kevin's insights on Tesla and the innovative Cybertruck, plus its potential to disrupt the automotive industry and the societal effects of remote work. As Musk advocates, how do you think these factors will affect Tesla's trajectory in the broader market? If you found this analysis informative, please feel free to share your thoughts and participate in the discussion below. This is Tesla Stock News. Thank you for watching, and until next time.